It is indeed our pleasure to have all of you with us for today's useful webinar on area of disputes under the GST regime, being organized by the Plastic Export Promotion Council of India, Plexconcil, in association with the knowledge partner Lakshmikumaran and Sridharan attorneys, LNS. I think there is a concern in the chat box on audio. Could you please confirm if my audio is clear?
We can hear it, sir, loud and clear.
Okay,
No problem.
great. As the apex body of the plastic exporters in India, the Plastic Export Promotion Council are continuously working in delivering their best services to its members and community members in the export fraternity. Friends, as we all are aware, that audit is one of the most important part in the GST department, which may lead to show cause notices as well. Further, there can be disputes under the GST regime, commonly arising in areas such as classification of goods and services, input tax credit, valuation, place of supply, refund, compliances and penalties, and discrepancies in GST returns. These disputes stem from differences in interpretation, compliance issues, protocol aspects, procedural aspects, and disagreements on tax liabilities. Mechanisms are in place to address and resolve these disputes, including appeals, adjudications, and dedicated forums for the same. To address these disputes, we are glad to have experts on this subject with us today. To guide us to the litigation issues like the GST on personal guarantee of directors, GST on transfer of leasehold industrial plots, a very important point and a concern that a lot of our members have raised in the past as well. GST on state government subsidies, as we know that the MSMEs today are granting a lot of subsidies to companies, and we need to be aware on what are GST liabilities, penalties, and compliances that we as companies need to follow. GST on foreign bank charges, etc. The webinar also covers critical issues in GST refund and provides tips on litigation management. We are pleased to welcome our speaker, Saurabh Malpani, Associate Director and LNS. Welcome, Mr. Saurabh. We are also going to welcome Shreyash Agrawal, Principal Associate LNS. Welcome, Shreyansh.
Thank you.
Once again, I welcome all the participants to this webinar and request everyone to take active participation to know more about the GST regime. And we invite you to keep sharing your views and perspectives with us. And together, let's build a great industry for all of us to grow and work on the PM's vision of increasing India's exports. Thank you all, and over to LNS team for further proceedings.
Thank you. Let me share our presentation first.
Sure. Maybe, Mr. Saurabh, you may want to increase your mic because the audio.
Am I audible now?
Yes, this is much louder and clear because there are a few participants who have a concern with the volume.
I read that.
Perfect. Thank you. This is loud and clear. Please go ahead and please start.
First of all, thank you, Naman, Bharti, and Dhruv for inviting us on the Plexconcil platform and having a discussion on a very important common areas of issues which are coming up during investigation, audits. So after 6 years of GST, department is pulling up their sleeves and
I think Saurabh, your voice is not audible.
Saurabh, your mic is on mute.
hello, is it audible now?
Yeah, now it is audible.
Okay. So I was saying we have completed 6 years of GST. Department has pulled up its sleeves and started to review the last 6 years. They've started audits, they've started investigations, and there are some common areas which are coming up in all these audits and investigations. we thought let us discuss this common areas of disputes on a platform like Plexconcil. So here we are. Thank you, Plexconcil, for inviting us to discuss these issues. Without wasting much time, I will proceed with our presentation. So first, majority of present over here are exporters. So we want to take export refunds first. If you're exporting, there are two modes of refund. Everyone of you know. One is export on payment of GST. Second is export without payment of GST. If you export on payment of GST, 2-3 years back, investigation started from DRI, DGGI that all those people who have taken advance license, imported under advance license without payment of IGST, they cannot export without payment of on payment of IGST. You have made an import without payment of IGST, you are making an export on payment of IGST. The industry was shocked. They actually opened the rule book. They found there is one rule 9610 which was sitting over there since 2017, since IGST exemption came in advance license. In 1920, the industry paid up the refunds or regularized their advance licenses by paying of GST, or they changed their mode of export from on payment of IGST, they came to without payment of IGST. They now started exporting under LUT without payment of IGST. Now, today, what I want to concentrate is a twin brother of the 9610 ghost, which came to you around 2-3 years back. There was a twin brother, which you may not know up till now, but you should be aware now if you're claiming refunds under LUT. There is a rule 89(4)(b), which kind of provides a similar restriction. Let me explain. If you export without payment of IGST and you go to the department and claim refund, what is the methodology that which department gives you refund? It is simple. You have 40% exports in that month, take whatever 40% of credit which you have availed in that month, take it home. Simple formula. If you have 60% exports in that month, whatever credit you have availed in that month, 60% of it, take a cash refund. It was a simple formula. However, it should be noted that this simple formula is based on an assumption that all your inputs which are there in the net ITC, which you are claiming refund out of the pool which you are claiming refund, all your export turnover which you are claiming refund, the export turnover is produced from those inputs which are tax paid. This is an implied assumption in that formula, which we say the turnover formula, which is rule 89(4). Anyone who is claiming refund, we may be knowing rule 89(4), which has a turnover formula. Your export turnover divided by total turnover into the ITC pool, multiplied by ITC pool. So 40% exports, 40% ITC pool का refund मिल गया. 50% exports, 50% pool का refund मिल गया. But there was a Gujarat High Court judgment of Philatex India Limited. This came a year back. This judgment actually brought to light rule 89(4)(b). Department 1 or 2 years back started denying refunds to whom? Those assessees importing under advance license without payment of IGST, exporting under LUT and claiming refund under the turnover formula. I will repeat, those assessees who have imported inputs under advance license without payment of IGST and have exported under LUT and then went to the department, filed a refund claim, and a refund claim was filed in the turnover formula. I have 40% exports, give me the 40% credit card refund. Department started denying to us refund to these SCs. They are telling, see, the correct rule is rule 89.4b, and department is saying 89.4b does not have a turnover formula. 89.4b does not have a turnover formula. You substantiate by documents whatever credit you have actually used in the export, you will get refund. This judgment did not discuss the issue in detail, but it brought to light that there is a problem of department denying refunds under rule 89.4 to those people who have imported without payment of IGST. And you should do a review exercise that open rule book of GST, read rule 89.4b. It will say if you have claimed the benefit of IGST exemption on import, take refund of whatever tax you have paid on other inputs. So it assumes that there are some inputs on which you have not paid tax. There are some inputs in which you have paid tax. Only those inputs on which you have paid tax, show to me by documentary evidences, take refund. Now there are a lot of legal challenges in rule 89.4b. One, it does not provide a formula. Can a rule be valid if it does not provide the formula for refund? That is the first challenge. It has to be tested in courts. Can a rule be valid, a refund rule be valid if there is no formula? There is ambiguity, there will be chaos. So that will be a legal challenge which will be tested in the future years in courts. But right now, what we have seen is investigations have started on those refunds which have been availed by turnover formula, and where refund is coming in excess of 89.4b. Philatex ka judgment gave us a little insight on how to calculate the refund. The commissioner had proposed that I will use an input-output ratio, and the court had told that okay, there was a settlement between the assessee and the commissioner regarding input-output ratio. You can go back and remand the matter and claim refund as per input-output ratio. So tomorrow department may come to you and say, tell me your input-output ratio, tell me what inputs are tax paid, what are not tax paid. So one is, you should take care if you are exporting under LUT and have imports under advance license without payment of IGST. Even domestic purchases under advance license, under invalidation without payment of IGST, or where IGST refund is claimed, there also this rule will trigger it. So this is an area of disputes which you should take care. Next, another rule which many of you must have not opened up. It is time to open up and read this rule. When I export, I have to realize the sale proceeds of export. If I have taken a refund under the GST Act and the sale proceeds are not realized later on, there is a rule which says that give back the refund. It can be because of bad debt, the whole of the sale proceeds may not be realized. You have to give back the GST refund, either the rule 89 refund or rule 96 refund, whatever it is, you have to give back. Either there can be a quality issue, you may reduce the price by 10%, 20%, 30%. You may give a credit note to the customer that okay, I'm reducing the price. That credit note will have an impact on your GST refund. There can be a price adjustment post exports based on commercial negotiation. Maybe a turnover discount which you may have passed on to the ultimate customer. That will also have an impact on your GST refund. Sometimes subsidiaries are there, goods are exported to subsidiaries outside India, and there is some price adjustment post exports to manage the profits of subsidiary. That price adjustment post exports may have an impact on GST refunds. So second point which you need to go back and take care is whether I have realized whole of the amount of proceeds of exports, or there are some credit notes in case of exports. If those credit notes are there, what is the impact of that credit note? You have to read Rule 96B. Third issue, every company must be taking loans for running the company. There could be working capital loans, there could be term loans, cash credit loans, various kinds of loans. Commonly, it is seen that directors of the company, usually the promoters, the managing directors or the whole-time directors, they provide a guarantee to the bank that these loans would be paid off. If not, I will pay it. Usually, it's a requirement of the banks itself that the directors give a personal guarantee. Agreement is executed with the bank properly for the personal guarantee given by the director. Now, GST department is saying, or there are some investigations which we have seen, that whether this personal guarantee given by director to company is leviable to tax. You may say, okay, no matter. Director do not have any other income, even if it is taxable. Under forward charge, director has no registration, no need to worry. You should be careful that all the services supplied by a director to the company are taxable under reverse charge. Hence, the issue arises. If it is taxable, tax has to be paid by the company. If the department is right, company has to pay the tax under reverse charge. Now, if the department is right or wrong, it needs to be actually studied. Second issue you may bring up that, okay, GST is leviable only when there is consideration. Here, I am not giving any consideration to the director. There is no commission being given. It should be remembered that director and the company are related parties. Director and company are related parties under the GST law. Hence, even if there is no consideration between two related parties, the service is taxable. There is a schedule 1, para 2. Now you may say, another argument you may bring up, the RBI regulations don't allow it. Even if I want to give a consideration to the director, RBI regulation says company cannot pay any consideration to the director for this personal guarantee given to bank. Now it needs to be seen whether these RBI regulations, if they mandate no consideration can be given, no consideration is possible in this scenario, whether still GST department can say it is taxable. It is a point which needs to be studied. It can also be said by you, director is an employee of the company, giving the personal guarantee is in the course of employment of the director. My agreement with the director says that he has to give guarantee to the bank in case of loans taken by the company. Whether that argument can be taken. There are various points in this area which needs to be studied, which needs to be taken care, and a proper, if department is coming to you, we should be able to answer them. And why it is not taxable or why it is taxable. If it is taxable, then another issue is valuation. Okay, if you say, I have full credit, I am eligible, no exempt supply, let me pay the tax, I want no dispute. Next issue is valuation. What is the value we will ascribe to this services of personal guarantee? Department we have seen is it is taking 2% of the loan amount. Since some companies, some banks charge guarantee commission at the rate of 2% or 1.5% of the loan amount. So they are like referring to the bank's commission and charging at 2%. So that becomes a very hefty amount. So what can be the value of these services? That is an area of concern. So here a decision needs to be taken by the company. Okay, whether I'm eligible for full credit, I want no dispute. Should I pay up? Or okay, I don't think this is taxable. I will defend it. So this issue also needs to be tested in courts, whether personal guarantee by directors is taxable or not. There are also between group companies corporate guarantee given by one person to another. There also the same problem will come. There, I think so, it is better to pay the tax. The arguments of no consideration in the course of employment may not be there. It is, if you are giving to a group company a corporate guarantee for the loans taken by group company, you should have a rethink on whether to pay the tax or not. That is also an area which department may take up. Next are foreign bank charges. If you open your profit and loss account, there will be a ledger of bank charges. If you tell your accountant what these bank charges comprise of, he may tell you that at the time of exports, there are also Indian bank charges, there are also foreign bank charges. You may ask your accountant whether you have GST invoice for every kind of bank charges. He may tell you that Indian bank, some kind of receipt is coming, GST is paid, 2MA it is showing. There is an amount of foreign bank charges where no GST is there. What are these foreign bank charges? You export for 100 rupees, you will see always you receive 99 or 99.5 or something. There are some bank charges which are deducted. These bank charges are of the foreign bank as well as the Indian bank. Foreign bank collects these bank charges from the Indian bank debits your account. That's why you are not aware that there are some charges paid by me to the foreign bank also. There is no privity of contract between you and the foreign bank. It is the Indian bank which has appointed the foreign bank for remittance of amount. On these foreign bank charges, the Indian bank generally does not charge GST. It just makes a debit from your account. On its own charges, what the Indian bank is charging, it will charge GST. It will show in your 2A, the GST amount. But there are some foreign bank charges on which no GST is being paid. It is only debited from your account, and you will show it in the ledger of bank charges. Now, foreign bank, if it is collecting some charges, means it has supplied some service. If it has supplied some service, there has to be a recipient of service. Now, who is the recipient? Recipient can be Indian bank, recipient can be the exporter, which is you. Let me tell you, in both the cases, there has to be tax paid on basis on import of service. Because place of supply generally will be in India, because in case of banking company, if it is an account holder, it is a location of supplier. If you are not an account holder of the foreign bank, then the place of supply is the general rule, where the recipient is. Either the recipient is you, either the recipient is the Indian bank. Now, this dispute is not new. In the service tax era also, this dispute used to arise. There are contrary rulings on this in the service tax era. There is a CSTAT New Delhi judgment in the case of State Bank of Bikaner, which says that Indian bank is not the recipient of service. Hence, Indian bank is not liable to pay service tax under RCA. It is being appealed in Supreme Court and pending in Supreme Court. There is other CSTAT rulings which say that exporter is not the recipient of service. Exporter is not liable to pay the tax under reverse charge. So one kind of ruling says Indian bank is not a recipient. One kind of ruling says exporter is not a recipient. Now there has to be some recipient of these services. One Madras High Court judgment which says that in a similar scenario, it says that exporter is a recipient. So there are all contrary rulings in the service tax era on this issue. So this is an area, if you have eligible for full credit, maybe you can take a stand, okay, let me pay tax under ICM, take credit, I don't want any dispute. That could be a stand. Or you may fight based on case laws of the erstwhile service tax era. This is an area of dispute, which generally we have seen in investigations. Next is, I think so all of the industry is aware of this issue. I've taken example of the MIDC, Maharashtra Industrial Development Corporation. You go to Maharashtra Industrial Development Corporation, I want a piece of land in MIDC. It says there is a premium to be charged. I will take a premium. You have to give that premium. The lease is for 99 years. You execute an agreement with MIDC. Whether that premium on that premium tax is payable? No. There is an exemption. Upfront premium, there is an exemption. Whatever premium you pay directly to MIDC, there is an exemption. Serial number 41 of the exemption notification. Now 1 year goes by, you don't construct any building or you don't construct your factory on that land. Your projects are stalled. You have cancelled your plans. You say, okay, let's sell this plot. Let's give up this lease amount. Let's live up this lease. You've got another company. You say, I have this land. It was taken for 99 years. Still 95 years are pending of the lease term. You can take this land. Whatever consideration is there, we can agree mutually. They agree on some kind of consideration. Usually what the allottee wants to do is he wants to recover the premium he has given to the MIDC. Also wants some extra, or it can be anything. There is some consideration charge for this to the second allottee. Second allottee pays this amount to first allottee. There is some transfer of lease happens from the MIDC books from first allottee to second allottee. Now the lease is in the name of second allottee. Whatever leasehold rights which the first allottee had, those have been transferred by MIDC to second allottee. DGGI started some kind of investigation whether this amount received by first allottee from second allottee, whether it is taxable to GST or not. What the industry was thinking from last 5 years is, I'm doing nothing but selling land. They consider 99 years lease as something which gives you all the rights of ownership of land. They thought, I am selling land. There is no question of GST. Even stamp duty is paid, we understand from industry on this amount. Sale of land is outside GST, everybody knows. So they thought, array, sale of land, but no question, no GST. Investigations are maybe happening that, okay, department is also thinking within itself whether this amount is taxable or not. What is happening here? Leasehold rights are being transferred by one person to another person. GST is a law which has subsumed everything. Service ki definition says if anything is not good, it is service. Even Schedule 2, it says that any lease to occupy land is a service. It's a deemed service. Now there is a question, there is a surrender of rights by first allottee. There's a question whether this can be amounted as a service from first allottee to second allottee, the transfer of these leasehold rights, and the amount received by second allottee to first allottee, is it linked to that transfer of leasehold rights? So this is an area which is coming up. Many people have started taking conservative views also. Sellers have started taking conservative views, charging GST. The top-up problem in this is, okay, if I also pay GST, whether I am eligible for credit. What the second LOT will do? It will take the land, construct building on it. There is a block credit section 17.5, which says that, okay, no input tax credit is allowed if a service is used for construction of immovable property. I am constructing immovable property. Whether the GST paid on this transfer of leasehold rights, whether I will get credit of this amount. It was okay up to the payment of GST. People thought, let's pay, let's take credit. But the top-up problem of getting the credit, availing the credit, whether it is legally eligible or not, is another issue. We request the association to specifically take up this issue with the government. Ideally, if they are exempting the first initial lease premium, what the first LOT is doing is only recovery of that lease premium for second LOT. They should also exempt the subsequent transfer and the subsequent considerations which are flowing in this transaction. If you are exempting the first initial premium, it is just an equitable to even exempt the subsequent transfers. So what the association should represent to government is, this is stamp duty is being, there are many points in favor of the assessee why it should not be taxable. There are many points in favor of the department why it should be taxable legally. So it's a area where there is maybe it was not to be taxed, but the GST law has taken it within its lap. So there are various issues here, whether GST is payable. There are two ARs which have taken a favorable ruling, if a ruling in favor of the department. So already ARs, the department is already of the views that GST has to be charged on this. Now, credit pay, we have not seen any AR that which says whether credit is eligible or not. That is another concern. So this is an area which you should take care. Then what we are seeing is that there are different slab rates under GST. India is too diverse. There has to be different slab rates. There is no question of having a single rate at least for the next 10 years, according to me. India is too diverse. Some essential items has to be in the lower rates, and there are a lot of different concerns for different rates for different goods. But that brings up the classification and tax rate issue. It is age-old issue. If you are having any goods under 5%, 12%, be very careful of actually check, have a review exercise whether 5% or 10, 12% is correct or not. Ideally, 28%, there are very few goods which are there. So I don't have a concern of something going to 28 or from 18 or something. Ideally, what we have seen is 5 and 12 people charge, but maybe the correct rate is 18. Sometimes 18 people charge, but correct rate is 12 or 5. So 5 and 12 versus 18 is the ideal dispute which we are looking at in the last 6 years. What classification of goods in GST is based on customs tariff. You should remember these basics. Customs tariff is based on a harmonized system of nomenclature which is devised by the World Customs Organization. It's a big 6 volumes of books. It's a Gita of classification. Those who are from the VAT mentality, you have to take up with the customs tariff. You have to go by the customs tariff read with the HSN. Don't go by what you were doing in the pre-GST era or what your thought process was then in the pre-GST area. The classification exercise has changed. It is more what was there in excise. Excise also had a different custom excise tariff, but here it is based on customs tariff, which is aligned with HSN. So you should be very careful if sometimes the customs tariff do not have a paras, and HSN may change the classification of the goods. We have seen that. People have gone by customs tariff, but HSN has some extra para based on which classification changed. So you should be aware of these issues, that there is something kind of an HSN You should have a review exercise of whatever goods you're charging at 5%, 12%. Even scraps, I've seen many times 5%, 12%, but many times it is that it is chargeable at 18%. So have an emphasis on this, especially even on imported items, because there the classification has to be decided by you, and you are declaring under the bill of entry. So be careful about it. Now I will hand over to my colleague Shreyas to take it forward. Shreyas,
Yes, thank you, Saurabh. So I will discuss some few more issues or disputes that we have seen that the department is taking up in the investigation or audits. Saurabh, can you? Yes. So the dispute that we have seen that the department is raising in investigation is that whenever a company is getting a state incentive subsidy, so various state governments have for a long period of time given industrial subsidy. This subsidy is typically of a type where they wanted to promote setting up of industries in backward areas. So the incentive policy says that if you set up a industry in a particular area with a minimum plant and machinery capital investment, minimum employment, etc., then whatever capital you have invested will give you a subsidy equal to 100% of that capital invested, and this subsidy will be given to you in form of SGST reimbursement. So you collect from the whatever SGST you have collected and paid to the government, that will be given you as refund back under this policy. So now the department has raised an issue saying that this subsidy that you are getting for setting up a plant in a backward area, this is a service that you are giving to the government. Now, what is the service? Service is agreeing to the obligation of setting up a plant and agreeing to the obligation of fulfilling all the conditions against which I am giving you subsidy. So this is what the department's case is. So again, we have seen that what happened in service tax, again in GST, they are trying to expand the scope of the simple entry, agreeing to the obligation to do an act. So here, what in our view is that there should not be any GST implication on such subsidies, because under GST there is a the essence of GST is nexus between supply and consideration. The consideration I am giving and the supply that I am providing should be related. Here I am not providing any supply to the government. There is no obligation upon me. It is an incentive scheme. If I want to participate in the scheme, I'll participate in the scheme. There is no obligation cast upon me that I have to participate in this scheme. So, therefore, in our view, there is no GST implications. But what we have seen is departments in various audits have raised this dispute. Next slide, Saurabh. Also, one common issue or common mistakes that we have seen in all the clients and all the audits that we have been experiencing the past 6 years is that every industry avails certain services from the government. They can be as small as pollution clearance, weighbridge calibration, water charges, inspection fees, factory license, or even your advanced license rectification payment or other payments that you make to various government organizations. In certain government organizations, they charge GST along with their charges. But in most government services, they don't charge GST. So under GST, there's a reverse charge notification which states that whenever services are provided by the central government, state government, or local authority to a business entity, then the GST is to be payable under reverse charge mechanism by that business entity, except from certain services, which are very few, three services. Also, there is an exemption entry in GST. The exemption entry in GST pertains to registration which is required under certain law, or services of testing, calibration, etc. Also, there is an exemption where you don't have to pay GST if the value charged is less than 5,000. So what we have seen is either the assessees not pay GST on all the government services, or they pay GST on all government services. But what should ideally be done is should take out your ledger of taxes and charges and analyze each and every government service. First, check whether government is charging GST and you are taking credit. Second, if they are not charging GST, then see whether you are liable to pay, whether it comes under an exemption entry. For example, if you are taking a weighbridge calibration or boiler inspection, these are exempted. If you're first time registering a factory or first time registration taken for pollution clearance, then it is exempted. But renewal of factory license or other charges, these are not exempted. So therefore, you have to analyze each and every nature of charges you are paying to the government and accordingly pay GST. Also, subsequent questions that arise is that, so for example, you have not paid GST till date and the government is demanding you GST now on these services. Whether you can pay under RCM the GST of all the 6 years on today, and whether you can take credit of all those 6 years of RCM that you are paying today as credit, and also whether you are liable to pay interest on all that RCM that you have not paid in the 6 years. So, regarding credit and interest, there are various arguments to say that credit is eligible because for RCM, the self-invoice date is the time of supply, and hence when I am raising the self-invoice, that is when I am paying the GST, and therefore credit is eligible. Also for interest, we can take a ground of revenue neutral because I will pay the GST and I will get the credit. Hence, various arguments can be taken if you are going to pay GST now for the past 6 years. So as far as so now what we suggest is first you should always, in whenever a government services comes, please see as to whether you are paying GST or it is exempted, and then only move forward. Next slide. Now, when the GST came, a lot of taxes like central excise, service tax, CVD, SAD got subsumed in GST. But still, there were instances when assessees had to pay service tax or CVD, SAD or excise now after the GST was introduced. Mainly, we have seen this in scenarios where you are regularizing advanced authorization or EPC, EPCG license. So suppose you have taken an advanced license in the pre-GST era and you have claimed exemption from BCD, CVD and SAD. Now, after the GST has come in, you realize that you are not able to fulfill export obligation and you want to pay the duties and settle and close the PCG license or the advanced license. In that case, BCD you will pay, you will not get any credit. But had you paid CVD SAD before the pre-GST era, you would have been eligible to take credit. Now because GST has come in and you are going to pay CVD SAD, there is no provision in GST to give you credit of the past taxes that you are going to pay. But can this be the sole reason why you don't get the credit of CVD SAD? So there have been various decisions of tribunals and high courts. In the first decision of the Madras High Court in Ganges International, they have held that just because GST has come into place, past taxes cannot be ignored. And because there is no provision due to doctrine of necessity, the credit of such taxes has to be given in GST. Whereas in the other decision of flexi caps, they have held that there is no provision in GST to give you credit of the old taxes. Hence, you have to be given refund in cash. Hence, what we suggest is whenever you are paying CVD SAD, please consult and file the refund applications claiming refund of or credit of these taxes. Also, there comes now linked to this point is a point of interest on CVD, SAD and IGST. So recently there was a Bombay High Court decision in Mahindra & Mahindra which held that for levying of interest, there needs to be a statutory provision for levy of interest. In the Customs Tariff Act and the Customs Act, there is no provision providing for levy of interest on CVD, SAD, and hence there can be no interest on CVD and SAD. So this can also be taken as an argument in cases where the department is demanding interest on CVD, SAD that you are paying now. Saurabh, next. Now we come to the a very important topic of litigation management. So since, as Saurabh told, department has started to actively investigate, audit, etc., it becomes very important for all the industry members to be aware of their rights, to be aware of the rules. So generally an investigation starts with issuance of summons. A summons is a basic document which calls for, which the intention is to call a person and to collect information. That information may be in form of documents or a statement may be recorded. The first rule is you should never skip a summons. Skipping a summons may initiate criminal proceedings against you. Secondly, you can request for video conferencing, but it is generally disallowed. And then you have to mandatorily appear. We have quoted a Delhi High Court decision in this regard, wherein the person in COVID wanted a video conferencing and denied. And DGI initiated criminal proceedings. They went to court, and the court held no. If DGI has called you physically, you have to go physically. And DGI has pan-India jurisdiction. So you may be sitting in Gujarat or in Bombay, but DGI Kochi may call you. That is possible and that is happening. Also, when you're going in a summons or investigation proceedings, you only have to submit facts and evidences and information. You have to only submit what is the truth. If you are unaware of certain facts, please say that I am unaware of these facts. I'll reconfirm and I'll convey you what are the existing or what are the actual facts. Also, if they ask you any legal question, do not answer the legal question. Suppose if they ask you whether this credit is eligible, whether GST is to be paid, say, I will contact my legal consultant, take a legal opinion and convey you. Never give such answers because such answers will be used against you in further proceedings of show cause notice and orders. Hence, be very careful where you are attending summons. Also, we have seen that as a pressure tactics, generally summons are issued in the name of directors, the name of the MD. But there is a circular which says, instruction which says that since directors and MD are not the persons who are handling the day-to-day affairs of tax of the company and they will not be aware of the various scenarios and information. Hence, first the summons should be made to the person concerned with the taxes. Hence, if suppose the director is summoned, the director can always ask and authorize their employees to go and attend. There is no binding to that, the director has to go. The CBIC instruction that we have enclosed of clause 15 can be relied. Also, one common thing we have seen is that under some pressure, when the investigation comes or when search proceedings happen, if the department pressurizes a person, the assessee sometimes pay the duties or taxes, whatever they are demanding. But it must be remembered that you should not pay any amount during investigation. There is a CBIC instruction which clearly states that during such investigation proceedings, no amount of taxes should be recovered. Recovery can only happen after giving a proper notice and passing an order. Before that, no recovery should be made. And in case a recovery is made under a pressure, then you should immediately file a letter saying that this amount has been under pressure taken from me and I am seeking refund of this same. There have been judgments where the high courts have said that an amount paid under such and such proceedings is not the correct way of recovering duties and they have granted refunds to assessees. And hence, please remember to not pay any taxes. If you have taken the view that okay, it was my fault and hence I have to pay tax and close the issue, it is a separate point of But if you are paying only under pressure, then please refrain from it. Saurabh, next. Also, one common fear that people have during search and investing proceedings is of provisional attachment. What if my bank is attached? What if something is attached? They are taking details of my bank account. What if they attach my bank account? So CBIC has issued a proper circular in this regard. The circular first says that what are the types of property that should be attached. First say they that only first preference should be given to immovable property like land, etc., building, etc. Bank should be at the last be chosen as a asset for attachment because bank seizes the entire operation of a factory on which thousands of people depend, and hence attaching of bank account should be the last option. Also, the amount of property that they are attaching should be commensurate to what their demand is. And also, the property must belong to the taxpayer. It should not happen that the property of the director or the employee is attached when the demand is on the company. They further say that provisional attachment can only happen in certain cases, such as where you have supplied goods without an invoice, or you have received an invoice without there has been actual supply of goods, you have taken fake credit, you have fraudulently obtained refund. So in only such fraud cases is there a power given to the government department to attach the property. In routine cases, in cases involving pure legal questions, there cannot be provisional attachment. Is very clear. There's also a Supreme Court decision which clearly states that in regular cases, in legal issues, there can be no provisional attachment. So when next time you face such fear, please refer to the CBIC circular. It will clear all your doubts regarding provisional attachment. Saurabh, next. Now there are few points that through the 6 years we have experienced that are common mistakes that the industry members are do. So first, in GST, all communications that you are going to receive will be through email or will be through GST portal. There you will not receive any hard copy post of any show cause notices or order. Everything will be received through email. The GST section clearly says that conveying the show cause notices of email is a proper way of communication. Hence, you should always check your emails on a regular basis. You should always check the portals on a continuous basis to check for any new communications that you have received. Also, all communication of the department should bear a DIN number. DIN is documentation identification number. If a document does not bear a DIN number, that means that document is not authenticated. Also, you should check the DIN number that is mentioned online. We have seen some cases where the DIN number is incorrect. So DIN number should also be checked whether the DIN is issued for this particular letter or not. Also, one common thing we have seen is that when we had applied for registration in 2017, we had put some email ID of some employee, some consultant, some director, or some other person of the company. Through the years, we have not changed that email ID. Now, what happens is that since your all communications are going in that email ID, and that person of whom email ID is there may not be in an organization or maybe a very busy person who does not even have the time to look in the email. In that case, what happens is that the show cause notice or orders are already in your email ID, but there is no person to check it. And hence, the time limit for replying to a show cause notice or attending a hearing or attending a summons or maybe filing of appeals, all those timelines are missed. We have seen number of cases where this has happened only because the email ID given was old and the person whose email ID is there is no more in the organization. You have to, if there is a provision in GST to update the information you have given to the department regarding the communications. You must always update the email ID when you think that the person has gone and a new person has come in. Or you can do one thing is create a separate email ID for all official communications and put that email ID in the RC certificate so that you have a separate ID only for seeing these legal notices that are coming in. And there can be 3-4 persons who are in charge of checking that email ID. What we have also seen that one, because of this email ID thing, people have missed their appeals to be filed within time limit. In GST, there is a outer limit to the extent of time that is given for filing of appeal. The normal time is 3 months plus additional 1 month of condonation. Beyond these 4 months, you cannot file an appeal for whatever reasons that you have missed. There is no power to condone after 4 months. There are Supreme Court decisions which say that post 4 months no condonation will be given. And hence, whenever you receive an order, it must be taken at a very priority, and decision for filing appeal and etc. should be taken at the earliest, and appeal, and it must be ensured that appeals are filed within the time period, because if you miss the appeal, you have no other remedy. You will have to pay the demand. Now, also one question that we face is, sir, pre-deposit is 20%. Do we have to pay 20%? Can we get some way out? In GST, as it was in excise, payment of pre-deposit is mandatory. You cannot file an appeal without payment of pre-deposit. Hence, whenever you are taking any decision, commercial call, to file appeal or not, please remember that pre-deposit you have to pay. It will only be refunded to you once your appeal is heard and decided. Second, the law says 3 opportunities of hearing must be given. So if a show cause notice has come to you, after the show cause notice, the officer has to compulsorily give you 3 hearing opportunities. Also, here we have seen a very particular thing is that in one notice they give you 3 dates and say you can appear in any of the 3 dates. Please note that such type of notices amounts to 1 hearing. You should get 3 separate hearing notices. So that is all from my side. We can take up the questions now.
Thank you, Shreyash. Great. Naman, Bharti, we can take up questions if there are any. I think so. To Ravi sir, I have replied on the chat box. His question was whether the foreign bank charges which are deducted, whether it will have any impact on GST refunds. My answer was no. It will not have any impact. It's an if it's anything, it's an input service for you. It's an input cost for you. It's not a short receipt of remittances.
Saurabh bhai, one point is there. Should I speak?
Yes, sir. Ravi sir.
We are getting short amount of EBRC, and while submitting the same, bank department is taking a view that we realize the short amount, and accordingly they are allowing short refund.
Okay, it is because of foreign bank charges.
Yes, because of foreign bank charges, and since accordingly we are getting EBRC with short amount, no?
Okay. Ideally, according to me, it is settled together. It's a financial settlement which it is made.
Yes.
But refund should be on the full value, because you have received full remittance, and then there is an input service of foreign bank received by you. For that, suppose you appoint an agent, foreign agent for selling goods, and you
Yes.
have a commission of that foreign agent. Department cannot come and say, okay, 10 rupees you paid to that agent, I will only consider 100 rupees, means I will deduct 10 rupees and only consider 90 rupees. That cannot be a case, because it's an input service. It's an input cost to me. So
But the amount
similarly,
is not realized amount is not realized.
Amount is actually, it's a financial settlement. 100 rupees is realized to you, and 0.5 you are giving back to foreign bank. It's a net settlement being made. EBRC is also kind of, actually you should ask your bank whether full BRC can be given, and a separate debit advice can be given for foreign bank charges.
Okay.
I think so. It should not impact the GST refunds, or even if it is, then you should reply to your department.
Okay. Thanks.
Hello.
Thank you.
Hello, Saurabh ji. Am I audible?
Yes, sir.
या सौरभ जी, आपने एक चीज बताया था कि लीज होल्ड के बारे में, कि जो सेकंड अलॉटी है उसको जीएसटी देना पड़ेगा, और जीएसटी क्रेडिट भी क्वेश्चन कर सकता है डिपार्टमेंट. सो माय क्वेश्चन इज, कि माने what should an applicant do in this case?
So it's a very difficult answer nowadays. There are different scenarios being going on. Conservative people, sellers are getting conservative. They are charging GST. So ideally, if you're a buyer, it's not in your hand. Sellers are compulsorily charging GST. Even if you tell the seller go for an AR and decide that AR will be against all the audience.
Thank you. Thank you
Thank
so
you,
much,
everyone.
Saurabh. Thank
Thank
you,
you.
Shreyash.